Today's video is worst trade of the week. And in this video, you will learn about the process short-term traders use to develop a trading thesis, and in this case, what went wrong. My name's Steve Spencer. I've been trading for over 20 years. I'm a partner at a proprietary trading firm in New York City, SMB Capital, where we specialize in training traders how to trade stocks, futures, and options from scratch. And if you're interested in more in-depth education on what we talk about in today's video, please check out our 2-hour free workshop. Today's video, the worst trade of the week. So I want to walk you through the criteria that basically short-term traders use on a daily basis to identify stocks, develop a bias, and then go through the trading part of it. The title of this video, Worst Trade of the Week, is because something went wrong. I went through my normal process, like I do each pre-market, identified 3 or 4 stocks that were in play, and the number 3 stock, which we're about to take a look at, I did my analysis and something went wrong. And I think there's something to learn here. A lot of times, short-term traders will take a loss in a particular trade and it's not that interesting. We come up with a thesis, we get long, we get short, we get stopped out, we move on to the next thing. But every once in a while, there's a trade that doesn't work out and there's a lesson or two to be learned. And that's today's example. And the stock is actually AA, Alcoa, the reported earnings. And so let me walk you through a few things. So the first thing we're looking at is trade criteria. This is kind of how we identify a stock before the market opens that we want to trade. And as I said at the top of the video, there's a 2-hour free workshop that I did with my partner, Mike Bellafiore, and the actual process for selecting which stocks to trade each day, I spend 30 minutes going in detail into this process. And so if you find this video interesting, click on the link below the video, and that will take you to a sign up for that 2-hour workshop. So the first thing that we do each morning is we look for stocks that have strong catalysts. An example of a strong catalyst is a stock that reported earnings and they raised guidance a lot or lower guidance a lot. That's something that's really going to get people, institutions, to jump in or out of the stock. And so that's something we look for on a daily basis. If we find something like that, that's something that's usually going to make our list. And then once I identify a strong catalyst, I go through a process of trying to understand how people are positioned. Because ultimately, how people are positioned prior to the catalyst will quite often dictate the direction the stock moves that day. And I've done other videos on this talking about this concept as well. The next point I want to say is pay attention to the early order flow. And what this means is right off the open in the first 5 minutes or so, you can see if institutions are going to be large sellers or buyers quite often on the open. They'll tip their hands, and that early price action, if you see large sellers or buyers, push it through the key levels we identify, it can establish a trend for the day. And so that's another part of the key things that we're looking for as I'm going through my process. Strong catalyst, how people are positioned coming in, so I'll look at the longer time frame chart, and then I'll zoom in to lower time frames and understand where people have been accumulating or distributing the stock recently, and those levels, that'll be kind of how I develop those levels. And again, much more detail in the workshop. So the stock that we're going to take a look at is AA, and here's kind of the analysis that I went through before I even traded it today. Number one, the stock is in a longer term uptrend. If we go back on a very long time horizon, you can see clearly in a long uptrend, was a $20 stock, trended all the way up, coming into last quarter into the 50s. And in fact, last quarter when they released earnings, gapped up and traded up to $60 a share before pulling in. The second thing as part of the analysis was after they reported last quarter, as I just mentioned, it was $60, but in the days after that, it actually sold off 20% into the high 40s. And so that's kind of, the reason I reference that is I know that stocks that behave in certain ways after reporting, if they're big movers in the days after the report, it's something to keep an eye on. Also, even though they reported a good number last quarter and initially gapped up, it did sell off 20% as well. Coming into the report, I always want to, as I said before, part of my analysis is how people are positioned. Well, if we look at the 3 weeks coming into this particular report, we can see that it was bought. And so if we zoom in on this daily chart, here's kind of the last couple of months. I've highlighted the bottom area there from June. Notice at 44, it got bought a couple of times. It bounced from there. And then in the last couple of weeks, it held a little bit higher, above 45, 45 and a half. And then in the last week, coming into earnings, was bought again. And so people are positioned coming into earnings having bought this stock. And so that helps me understand that depending on where it opens and where it trades in the first 30 minutes, more people could be trapped depending on how low it trades. When they reported in the after hours, the initial reaction was lower, but it did bounce off that recent support. And if you look at the initial after hours reaction there, it dropped down to 45 and a half. And if you look at the left side of the chart, you can see a couple of weeks ago, it got bought at 45 and a half twice, then bounced up to the high 40s. And actually this chart we're looking at right now really kind of gives you an idea of where people are accumulating the stock. In the most recent week, it was about 47. And then if we go back a couple of weeks, it was between 45 and 46 and a half. And depending on where it trades during the day, that's going to get people nervous. And so people are all the same across, have the same psychology. Small investors, medium investors, big investors, they want to know when they're losing money. And when they're losing money, a number of those people will start to sell. And when some people start to sell, if there aren't enough buyers to absorb at that price, it drops to lower prices. And then when it gets below the next key level, there's more people who are losing money, and kind of it can have this snowball effect. And I think this drill down chart on the 5-minute gives you an idea of how I kind of pick the levels. Here are the notes from the morning game plan. You can see I've highlighted 45 and a half to 46. That's the area where it kind of bounced from a few weeks ago. And you can see initially on the reaction after the earnings in the after hours, it did actually drop to that area. And then when we come in the pre-market, you can see this chart shows it on the right-hand side, all the way on the right, it's above 47. And so we know right on the open, if it drops to that 45 and a half area and then can get back above 46, we might get a repeat of the bounce that we saw in the after hours. And then on the other time frames, the higher time frames, if it fails there, you can kind of see on this 4-hour chart going back to March and April, 44 is the next level. If it fails at 45, 45 and a half on the open, and it's holding below that area, 44 is our next area of support. And below 44, you have to really go back on the longer term on the daily, all the way down to $40 a share. And so that kind of gives us all of the prices that we need to know. And then ultimately, as short-term traders, we're going to judge off of that price action how to trade it. And so the key mistake that I made was that analysis, all this makes sense, perfectly good. But the things that I didn't pay attention to enough was, number one, the company guided down 15% on the revenue. And that normally, that's like a big one that catches my attention. Some company, and I put it actually in the notes, you can see in the notes from the morning game plan, guides down 15%. The reason I put that in there is usually the thing that I consider most important, I'll put in the notes in the morning game plan. But the one thing that I did pay attention to, which normally I don't, and then this is why I'm actually doing this video, is because I gave some weight to a thing where I normally wouldn't pay that much attention. And it was the JP Morgan analyst says the price down here in the 40s reflects aluminum going to much lower prices. Now, the reason why I normally don't give that much weight is, number one, sell-side analysts are not short-term traders. They're just playing a completely different game. Number two, the analyst who actually said this price reflects much lower aluminum, they're bullish on the stock. They had an $86 price target coming into the earnings. And the stock had traded down, I told you last quarter, from 60 all the way down to the 40s. So if this analyst has an $80 target and the stock's already traded down to the 40s, they're wrong. They haven't been right about the stock to begin with. So that's another reason to discount anything they say. And the second thing is they lowered their target from 86 to 80. So, I mean, it's not something to pay attention to. I think when I saw the after hours bounce from 45 and a half, where it kind of bottomed a couple of weeks ago when it got back above 47, I thought to myself, maybe there's something to that. And if it can bounce from 45.5 and get back above 46, maybe this will be the beginning of a bigger move. And I, in my mind, maybe got a little bit greedy, and I said, if I can catch a bigger move, back up into the 50s, that's going to be a pretty good multi-day trade. And so that was kind of a little bit of my thought process. Maybe I was a little tired. Also, it wasn't one of my top two stocks. My number one stock was eBay, which I was really focused on. My number two stock was AXP, which I had scripts in to trade that on the short side. And maybe those first two, I was focused on the short side. So maybe I was leaning, maybe looking for something to trade long. Maybe didn't want to have all my top four stocks all be on the short side. Here are the notes from the analyst. Here's what they actually said. Wasn't particularly important, but that was kind of the thing that got me to think long, even though the price action took out my support level from the notes there. And so let's take a look. Let's drill in and actually look and see what happened. So the market opens. It immediately shoots down right below actually the 45.5 level that I have in my notes for support, but then it bounces above it. So this is like the first 5 minutes. It actually bounces back above 45.5 a couple of times. And I'm not watching that closely. Again, it's not my primary stock. And I'm like, okay, well, it's back above 45.5. It dropped below it right in the first couple of minutes, but we know in the first 15 minutes we see very wild price action. Sometimes things drop a level, and if they can get back above that level and hold above it, we can get strong reversals. But you can see I've highlighted on the drill down here the 46 and 45.5. And that green bar, you can see kind of that green bar after a couple of minutes after the open. What you want to see is another green bar after that, take it to the top blue line and get a close above that. And if that happened, stock would be a long. Bounces from kind of the support area, get a couple of green bars, closes above that little potential support zone, but it doesn't do that. And I've actually highlighted it there for you. Even though it spikes into that area twice, it fails to close above that area. And the sellers, it means basically the sellers are in control. I actually get stopped out of the long trade, but then I look for some other spots to get long. And that was kind of the mistake. If you look at the next chart here on the 5 minute, at around 10:15, 10:30, I look at it again, and after coming all the way down to $43.50 a share, it starts to move sideways. You can see a green bar, then it moves sideways. And so this actually wasn't an unreasonable attempt at getting long from just a very micro time frame. It had been trending lower. The trend kind of started to move sideways, and then I got a strong green bar. And the strong green bar actually coincided with it getting back above $44 a share. And if you know in the higher time frame charts I talked about a few minutes ago, 44 had been support over the last few months on the higher time frame. And so big green bar gets back above longer term support, gets really tight, and then on the tape I actually saw a 44 buyer. The sellers had come down to actually 44.01, 44.02, but the buyer was holding it there for about 10, 15 minutes. And so put on a trade. I actually had bought some on the first green bar, bought a little bit more there when I saw the buyer at 44, and then I just put a stop. I was actually off the desk when I got stopped out of it, but that was a perfectly reasonable trade. I dropped a couple of dollars from the open, 1.5 ATRs, and a micro time frame, fine. From a bigger picture perspective, the sellers were still, it still had been in trend for that day, but this was an example of not a bad trade. Oh, and by the way, on the trade overall, the interesting thing about the trade was kind of my ignoring a little bit the price action on the open when it took out those support areas and not like flipping to a short bias, to paying attention, as I said, to the sell side analyst who had been wrong for the last, $35 had a target, $40 above basically where it was trading, coming to earnings almost 100% higher. Those were the interesting things to me about the trade. I actually didn't lose that much money in it. So worst trade of the week from an analysis standpoint, really not paying attention to the price action on the open, not giving too much weight to someone who's not in our game. So for the recap for the trade. Number one, we want to get stocks that have a strong catalyst. This stock did have a strong catalyst. They guided down 15% going forward. My kind of ignoring that strong catalyst, meaning with that strong catalyst, if it took out the after hours low from when the earnings were released, I should have been immediately focused on flipping my bias to short, and I wasn't. Number two, understanding the support and resistance levels. Yeah, we did that. We highlighted that. But again, once it got below that support from the after hours and then took out the opening low, just didn't flip to short again. Ignore the outside noise, meaning a sell side analyst who has a target 100% above where it's trading is not particularly important. That's outside noise. And then price action confirmation. Did the price ever confirm my initial trade buying at support? No, it spiked above it a couple of times. It got about 30 cents above twice in the first few minutes, but ultimately the next couple of bars were closed below that price, closed below the $45, so I never had price action confirmation. And you're going to hear short-term traders a lot talk about price action confirmation because we come up with a thesis, and once we come up with our thesis, we want confirmation via price. Hope you enjoyed this. Hope you learned something. Worst trade of the week. Took a loss. Made some mistakes. Hopefully you're able to get something out of it. Oh, and by the way, that whole process of the stock selection of how to identify these trades is in the 2-hour free workshop. Click on the link below the video. That'll take you to it if you found this interesting.